And this has actually become somewhat of a hot button issue with the IRS as of late, because it used to be, I remember whenever I was practicing, they never asked about basis. It was just one of those things you kept in case if you got audited. Now, if you want to take losses, you're supposed to submit the shareholder basis showing that you were able to take the losses and you had basis. Today, we're going to talk about a very exciting subject, S-Corp Shareholder Basis. But before that, I wanted to talk to everybody out there. We're putting these videos out about once a week to go over tax matters and accounting matters. If this is something that you really enjoy, hit the subscribe button so that way you can be updated whenever we put out a new video. We'd really appreciate it if we could get as many subscribers as possible. Andrew, one of the more complex areas of tax law, especially for S-Corp owners and shareholders, is the topic of shareholder basis. I know that that's a very complex area, and I was going to see if you can dumb that down for us a little bit to help us kind of understand in layman's term, whenever we hear shareholder basis, what does it mean and how does it affect me as an S-Corp shareholder owner employee?
Sure, yeah. So shareholder basis is complicated. It even seasoned CPAs can struggle with it, but it is important for every business owner to have a high level understanding of it. So in this example, I'll kind of keep it specific to S corporation owners. So shareholder basis is just a number, right? It's just a number, and it's a number that increases and decreases based on the activity in your business during the year. So it's really, in the IRS's eyes, it's what is your investment in your business. So I always like to use it as like a checking account example. Like shareholder basis increases by money you put in, any earnings, and it decreases by any withdrawals. So it's a number that's calculated every year, and we take care of that when we do your tax return. We calculate your shareholder basis. So there are two big reasons shareholder basis is important. One being it helps determine if the money you have pulled out of your company through shareholder distributions is taxable. And it also helps to determine if you have a loss for the year, if that loss is deductible. So if you do not have enough shareholder basis, it could cause issues for you in deducting losses and pulling money out of your company.
Right.
So shareholder basis, it increases with money you put into the company.
Right.
It increases with paying taxes on taxable earnings. Having profits from your company is going to increase with taxable profits, and it's going to decrease by money that you pull out of the company or losses that you have taken,
right?
Tax deductible losses you have taken. So it's a calculation done every year, and it's just, you just want to be mindful of what that number, how that works, just as you go throughout the year, so it doesn't trip you up. Because I tell you, a lot of times when it comes into issues for business owners is if, say you're having an awesome year, you're having a lot of taxable profit throughout the year, you're paying yourself a reasonable salary, and you're also supplementing your income by taking shareholder distributions. So come the end of the year, you call us up, we do some tax planning for you, and there's a tax balance that you aren't prepared for. So we start figuring out ways to lower that tax balance, and one may be to go buy a vehicle or something like that before the end of the year. You go buy your vehicle, you drive your taxable profit way down, but you've still got all these distributions that you've taken out through the year. And you don't have enough basis, you don't have enough taxable profit or money that you've put into the company to justify those distributions.
Especially if the loan was in the company name when you purchased the vehicle. That's where we see a lot of people get into trouble. They take all their money out of the business. They go buy a vehicle in the company name at year end and think they can deduct the whole thing. The problem is they took all the basis out of the company.
Correct.
And now no longer have any basis to deduct the vehicle in which they purchased.
Correct.
Because the loan from the bank in the company name does not increase shareholder basis. It's only the money the shareholder puts in, or the money the shareholder loans, or the profit of the business that will increase basis.
Right. So just understand, if you're having a really awesome year, you're killing it, you're making a lot of money, you're pulling money out to pay yourself, just keep in the back of your head that if you've pulled out $50,000 in shareholder distributions, just understand you probably want to at least show $50,000 of profit.
Right.
To justify those distributions. Because if you get to the end of the year and you want to wipe out all your profit and try not to pay as little tax as possible, it's going to create a basis issue most likely. But it's certainly a conversation to have with your CPA to make sure you got a good idea of how that's working out for you, because we see it all the time. People get tripped up with it towards the end of the year. So,
and this has actually become somewhat of a hot button issue with the IRS as of late, because it used to be, I remember whenever I was practicing, they never asked about basis. It was just one of those things you kept in case if you got audited. Now, if you want to take losses, you're supposed to submit the shareholder basis showing that you were able to take the losses and you had basis. Right. So very important that it's tracked yearly. Here at REH, we make sure and track that with every tax return, and it's submitted with every tax return. We're going to have losses, so there won't be a question when the IRS goes to look at it.
Sure, and it's definitely something, even if you feel like you've been using another CPA or someone, or you know for a fact that you don't even have a basis schedule, you haven't been tracking it, feel free to reach out to us because we can recalculate that for you fairly easily if we can
run
get your
into
tax
it
returns.
all the time where we will get a tax return from another CPA firm and we'll ask for the basis schedule, and they have not been tracking basis for years, and it's a major problem.
Yeah, so it is something that you want to make sure you got an understanding of at a high level, and a conversation needs to be had with your CPA to make sure.
Yeah, absolutely. So if you've got if you have an S-Corp and you want a better understanding of basis, how it's calculated and how it could affect you, or if you just need tax planning in general, go to our website, rehcpas.com, hit the contact us form, and somebody from the firm will reach out to you to set up an appointment. Well, Andrew, thanks for helping everybody understand a very complex issue in a simple form.
No problem.